welcome to today's webinar. Super glad you could make the time to join us. I've got some friends here, colleagues and business partners who are going to share some really exciting news, have a fantastic discussion. There'll be a presentation. There'll be some interactive Q&A between the panelists, and there'll be ample opportunity for you to ask questions. Now, before we start the first presentation on today's webinar, which concerns Reg Cf, regulation crowdfunding, the impending increase to $5 million as a raise ceiling, and why this is game changing for early stage startups and the creation of communities that support them. I'd like to run through the panelists here and have them introduce themselves. So first you'll hear from Ben DiScipio, then you'll hear from John Nance, and then Gautam Gujral. And hopefully by the time they've all done their introductions, Jenny Ta will join us, our special guest, Jenny Q Ta from Twitter and LinkedIn. You might know her from Coinlinked.com. So hopefully we'll see Jenny here shortly. And so let's start with you, Ben. Can you tell us a little bit about you and Fundopolis and your journey to this phone call?
Sure. So my name is Ben DiScipio, and I'm the co-founder and chief strategy officer for Fundopolis. Fundopolis is a crowdfunding platform, but we're a company that's actually set up with several regulatory entities. We have a funding portal, which handles our Reg Cf business, and we're also a broker-dealer with an investment banking arm. So we present a kind of a full stack of opportunities for companies that are looking to raise capital. And we're here to talk about today Reg Cf because there have been some new changes that really have changed that environment greatly, and we'll go into more of it later. John?
Thanks, Ben. Hello, everybody. Thanks for joining us today, and thanks to Vertalo for hosting. My name is John Nance. I'm the CEO at DealBox. DealBox is a specialty capital markets consulting firm. We specialize in three main verticals here at the business, which center around investment packaging, preparing companies to raise capital from the private markets. I'll get into that a little bit later after Ben's presentation here on the webinar, and I'll cover that for anybody who's interested in learning more about how we stand up companies and prepare them to go raise capital. The second vertical of the business here at DealBox is an online funding platform similar to Ben's at Fundopolis, except for we specialize predominantly in Regulation D offerings, which we're not here to talk about today. If you have an interest in that exemption, feel free to send me an email or a note in the chat. And then the third side of the business is a recent rollout of what we call the liquidity services division here at the business, and preparing companies for the utilization of trading private company assets via direct listing on alternative trading systems. So that's a little bit about me and DealBox, and happy to be here with you today. Gautam?
Thanks, John. My name is Gautam Gujral. I'm the co-founder and general counsel of Vertalo. We enable the digital ecosystem. And just as importantly, as we will find out during the course of this webinar, we are also a SEC registered transfer agent, and that will the importance of that will become clear during this webinar. Prior to Vertalo, I was a managing director at Credit Suisse, and before that, I was a special counsel at the Securities and Exchange Commission in DC. And Jenny.
Joined just in time.
Jenny, well, how about a quick introduction?
Hi, everybody. What do I do, Dave?
Jenny, you create communities. That's what you do. You connect people. You are an Uber linker. You're an entrepreneur. you're a former owner of a broker dealer, you're you know, and a personality on the internet, probably a future NFT as well. So
I don't know about the future NFTs there, kind of behind on that, but everything else, you know, it's right on top there. Yes, I am quite confident, and I believe I'm quite good when it comes to SEC regulations, which we're gonna start dealing with in a cryptocurrency sector and digital asset securities. You know, with Gary Gensler gonna be confirmed soon, Yellen and the entire Biden team. I do look forward to that because that's where my strength is, from founded and ran 2 broker dealers from the ground up. And then obviously currently I am running 2 companies, Coinlinked.com, which is a social media platform, and a VC network, which is connecting startups with investors around the world. Interesting thing with the recent Reddit and GameStop situation, social media platforms now are going to emerge into communities, such as the GameStop community came from Reddit, which is a social media platform. People started to do groups and communities on Telegram groups, for example. Those have not been as effective as communities like the NFT communities on Twitter and Reddit. And we are building a community of our own on CoinLink as well. And so I will pause it there. We don't want to bore the public, so we can get going. And then if there's any questions, then we can certainly dive into that more. But I wanted to say hi to, I know there are a number of our current investors of CoinLink have joined today. Some of my friends, those startup founders that I'm currently mentoring, I know they're watching. And let's just say fans and followers on social, on Twitter or Instagram, that I've recently sent out an invite, and I know that they're probably here today. So a shout out to everybody. Thank you so much. It's a rare view that you get to see me live. So here I am.
Fantastic to have you here with us today, Jenny. Thank you for joining. Like I said before, we're going to feature a presentation today. It's a very, very educational presentation about regulation crowdfunding, and Ben DiScipio from Fundopolis is going to take control of the screen and give you a great primer on Reg Cf. And again, the questions are open on the side. And what we'll do is, if you've got a question and we can insert it in, we'll do that. But Ben, I'm going to hand over the screen and the microphone to you.
Great. Are you seeing my screen?
Yes.
Perfect. So might as well get to it. First thing I want to begin with, obviously, is that the information that I'm about to share with you is not to be construed as legal or investment advice. It's purely for informational purposes. We are a portal, obviously, that does a Reg Cf business on a regular basis. We have been for almost a year and a half now. So without further ado, let me get into the slide presentation. So what is Reg Cf? So Reg Cf is an exemption that came into play 2016, May of 2016, as part of the 2012 Jobs Act. And it created an exemption that allowed any company to be able to raise capital from unaccredited investors and accredited investors. Now, it was designed to democratize access to capital and democratize investing. what ended up happening is there were some issues with it, and we'll go into that. The way my presentation flows, I'm going to first give you a picture of what Reg CF is today, and talk a little bit about what that experience is. And then I'm going to go into the rule changes, and I'm going to talk kind of one by one through each of those rule changes and why they're important and how they can impact your ability to raise capital. So let's start with the obvious question. Why do I want to use Reg CF? Why not just use Reg D? Why not use the exemptions that are out there already? You know, they've worked for decades. Why use Reg CF? Well, we're in, you know, as certainly as Jenny shared, we're in an era of social media. And as we've seen, I think in the last year more than ever, the impact that social media can create for politics, for life, for the world, for businesses. And it's increasing exponentially since the pandemic. And it's creating new user habits. And those user habits then will become very important for once the pandemic goes away, because people aren't going to change dramatically those habits that they're starting to move into, where we're having more connections that are happening online. People are searching for information online really now because it's the only thing that's available. But crowdfunding now is more important than ever before, because you have the opportunity to reach out to your customers, your partners, your social media following, the followings of your team's social media, and invite them to join in your capital raise. They don't have to be an accredited investor. They can just be anybody. I mean, even if you have no income, you can invest up to $2,000 a year in regulation crowdfunding. So it really, it involves a lot of people. And along the way, it has wonderful marketing benefits. So let's go through what this slide's looking at. So it gives you an opportunity, you know, early in the idea of raising funds online, we had Kickstarter, we had GoFundMe, where a company could conceivably go to Kickstarter, gain access to, you know, essentially an angel round for them in exchange for the promise of a product or some type of a reward. So instead of rewards-based fundraising, now we have the opportunity to actually offer securities in exchange for that capital. So no longer do you have to ask for a donation or ask for some type of rewards donation, but you can actually do a real investment with either equity, debt, or convertible note, or something called a revenue share note, and I'll go into that later. One of the most exciting aspects of regulation crowdfunding is that you control your own terms. So, you know, most of these companies, most startup companies, especially on the tech side, you know, they would normally be going into angel investors for early rounds. And angel investors are looking for a certain type of return. So, you know, if you're going to a VC or an angel, you're negotiating with them in terms of what your terms are, and they're going to give you what they're willing to do. And generally, it's not exciting for you because you're going to end up giving up more than you want to give up, especially early on. This gives you the opportunity to create your own terms. Now, obviously, you're negotiating with yourself here, and that negotiation is important because it can affect the investability of your raise, but you still do control the terms, and that's exciting. It's less rigorous process to stand up than a direct listing or a regulation A or regulation A+. CF is run by a funding portal, and a funding portal has a responsibility to do a reasonable man's effort to diligence an offering before it goes up, as opposed to a broker dealer that handles D or A+ that is required to do a much deeper set of diligence. So the Reg CF process, what's required in terms of filings and being able to stand it up is going to be faster, certainly, than a direct listing, but also than a regulation A or A+ that needs to be reviewed by the SEC before it goes live. But one of the most important aspects of regulation crowdfunding in terms of what it can do for a business is its marketing benefits. And the reason for this is you're getting thousands and thousands and thousands of eyes on your offering as it goes live. And a small portion of those may become investors, and that may frustrate you. But the exciting part is that each one of those sets of eyes that takes a look at your raise has the opportunity to learn a great deal about your company, learn a great deal about your product, about your people, about the team behind it. And it gives them a connection to that business in a way that normal advertising really would never do. And there are front end marketing benefits and there are back end marketing benefits. The front end is that you're getting tons of eyes on your company, and a lot of those eyes have the opportunity to become customers. And we often do see that happens on a frequent basis. Somebody may not invest, but they become a customer, or they may become a partner. But then there's another side of it, which is as these people that are potentially customers or potentially partners of your business invest in it, now your investors can become brand ambassadors for you. So they can drive business to your company because they have an investment there. They have a vested interest. And we've seen that really become an important reason why companies are using regulation crowdfunding. Just for the marketing benefits. We have some raises that were done just for marketing. They didn't particularly need the capital. They had multiple ways that they could get that capital, but they did it with regulation crowdfunding because they wanted to get those eyes on their company. So here's a summary of the way regulation crowdfunding looks today. These are each of the kind of important characteristics. First of all, the offering period is over a 12-month period. So your limit is based on a 12-month look back and look front. Over the last 12 months, how much have you raised within regulation crowdfunding? And you're allowed to raise up to 1.07 million per 12-month period. Now that's going to change on March 15th, and that's the exciting part, and we're going to get to that later when we talk about the changes. General solicitation and advertising is permitted, but there are restrictions on that. So regulation crowdfunding restrictions on general solicitation really limit it to simply the terms of the offering, and they want all of the communication for the offering to come from the intermediary portal. So when you do a regulation crowdfunding round, it has to be hosted by either a funding portal, a SEC registered funding portal, which we are, or a broker-dealer, which we also are. So either one of those can fund it as an intermediary portal. And then they can help you to kind of navigate the solicitation and advertising rules, but they're very specific. The company requirements, they have to be US based, so it excludes all non-US. Can't be a blank check company. So if you're something that looks like a SPAC, you don't have a place in regulation crowdfunding. You can't be a reporting company, so you can't be a public company, and it excludes investment companies as well. Bad actor checks are required on all the offices, directors, owners. There are more that are required to have bad actor checks, and we can kind of go into that later, or maybe with a Q&A. Like if you have somebody that's promoting your offering, those people need to be bad actor checked as well. One of the exciting things about regulation crowdfunding, in addition to Reg D and Reg A, is that they preempt the individual state laws, the blue sky laws, that require you to register your offering in each one of those states. And all of those laws are very different, so that can be a very cumbersome process to navigate, but regulation crowdfunding preempts that. There are investor limitations, and we're going to get into this later because those investor limitations are changing in the new rules, but it's a complicated formula for unaccredited investors, and accredited investors are limited currently to $107,000 investment. Then offers and sales can only take place, as we said, through the registered crowdfunding portal or an intermediary portal put up by a broker-dealer. The SEC needs to have filings of a Form C, your offering memorandum, and any other required documents that are required to be filed prior to going live, like your financials. And there are resale restrictions on the securities. So in general, there's a 12-month restriction on transfer of securities unless those are being transferred back to the company that issued them or to an accredited investor. There are other less common transfer loopholes, and we can certainly talk about those, like in case you die or something like that. But for the most part, you can think of these as you need to buy them and hold them for 12 months. So the onboarding process, so what does it look like for an issuer that wants to raise using regulation crowdfunding currently? So each portal is going to have a different specific process. Here I'm going to talk about Fundopolis' onboarding process and kind of what's involved here. So first thing we do is we take a quick questionnaire just to make sure that you aren't immediately disqualified by any of the disqualifying reasons, either for company or people that are part of regulation crowdfunding. And then just put up a quick business plan that we can take a look at. And if it looks reasonable, we'll generally approve that pre-screen and you can go into our wizard. One important early step in the process, and this is really important, and it's largely because this is the long pole in the tent, is you have to determine what kind of treatment you need for your financials right in the beginning. Because if you need to have them reviewed or audited by a third-party accountant, you need to get that going quickly, because that can often take longer than any of the rest of the process to get you live.
And Ben, Dave here. I think we're going to cover a bunch of these topics after in a little bit with John Nance. So,
okay.
I think one of the important things that everyone needs to understand is you can't just show up at Fundopolis or any other Reg Cf platform with with a website and an idea, but you actually have to have a data room, financials, and these things. And part of this session here is going to help you understand a little bit more about what that is. So I think you'll hear some more from John Nance from DealBox about this a little later.
Sure. So we have a proprietary wizard that we use for our intake. It's kind of like a TurboTax-like system that allows you to just take a look at a small factor of your business at a time so that you can focus on one thing at a time and you aren't presented with the enormity of the information that needs to kind of go in and be considered. And then that wizard automatically creates the basis for your offering memorandum, your Form C, your raised presentation page. That all gets created out of the wizard. And then we review it. Bad actor checks are run. Our escrow agent needs to approve the deal as well. And then once they approve it and we say that it's good for you to go, you can go live. So now let's get into a little bit about the rule changes, and that's why we're here today. So there are increased offering limits to $5 million. Investor limits have been changed. So accredited investors no longer have a limit, and we'll get into what that means a little bit later. For unaccredited investors, they're going to be allowed to invest a little bit more. And the reason is that the complicated formula used net worth and annual income as the factors. In the previous formula, you were factoring off the lesser of those two, and now it's been changed to the greater of those two. So if you can imagine, if you have assets of $25,000 and a $200,000 income, previously you were limited by that $25,000 in assets or in net worth, and now you're looking at that $200,000 income, which is going to give you an opportunity to invest more. The COVID temporary relief measures, and we have a slide on that later, are now extended to August 28th, 2022. And this represents a real opportunity for companies that are looking for smaller raises to get that up really fast and not to have to worry about having their financials reviewed right away. Then, very interestingly, the creation of a new special purpose vehicle. SPVs are something that was requested by portals and issuers for quite some time since crowdfunding first came out. And now they've created this special, quote unquote, crowdfunding vehicle. It's a type of SPV that essentially allows all of the investors that come in to take a single line item on the cap table. So as far as the cap table is concerned, there's only one shareholder of record for the entire crowdfunding round. Testing the waters is now allowed, and generic solicitation was changed a little bit. We'll get into the specifics of that. And then there's an exemption now from general solicitation for demo days. So, you know, oftentimes companies are going around and participating in conferences and presenting, and they'll have a table at a conference that's sponsored by somebody. And, you know, the question is, well, can I talk about my raise while I'm at that event? And really you couldn't. So, you know, they've really kind of clarified that and provided a safe harbor for certain sponsors to be able to hold events for demo days that give you an exemption from the general solicitation rule. And then the advertising rules were expanded a little bit. So let's get into exactly what this means. So for the offering increase to 5 million, not only does this give you the opportunity to raise, you know, a more reasonable round. So, you know, for tech startups, $1 million in a 12-month period is a drop in the bucket for what their needs are for early rounds. So oftentimes you'd see them have to supplement their CF raises with a side-by-side Reg D or follow it up with a Reg D. Now they can actually conceivably get their entire round all within the CF. And what that does beyond the access to capital for that individual company is you're going to see a lot more companies participating in the CF world. In fact, we're seeing even in the investment banking world that there's a renewed interest in the CF exemption because of this raise to 5 million. What that's going to do is it's going to increase awareness, not just from issuers, but from investors that are getting pulled into regulation crowdfunding rounds for companies that they're connected to. And as more investors get pulled in, you now have a larger table of investors to speak to that are aware of what regulation crowdfunding is and what its benefits are and what opportunity that represents to investors. It's you know, it's really important. I mean, one of the things that we noticed when we were doing our testing, our marketing testing as we were about to launch, is that most people that we were doing testing with thought that we invented regulation crowdfunding because they weren't aware of it. So as awareness grows, your opportunity and the benefits of regulation crowdfunding also grow. Education is important there. Investor limit increases are really important as well. Taking away the limit entirely for accredited investors is a game changer because it allows you to potentially have an anchor investor who can come in with $500,000 or $1 million. Now, if you're doing a $5 million raise and you can show over $1 million raised within your first 2 weeks, that's going to attract the attention of the quote unquote crowd. And that's going to get you a lot further along the way to getting kind of a viral response to your raise than it does now. And when you combine that with the opportunity to test the waters, now you really have a tool that you can use. So the investor limits are important, but additionally for the unaccredited side, you know, keep in mind that these investor limits on the unaccredited side are per 12-month period, and that's across all regulation crowdfunding. So if you invested in 3 different regulation crowdfunding offerings, you're limited to $2,000 across all 3 of them. So being able to get a little bit more there can have more participation. The SPV vehicle is really important with regard to Section 12G. And I know, John, you're planning on talking about Section 12G, so I'm not going to go into that too much. But essentially, Section 12G of the Securities Exchange Act says that if you have a certain asset level and 2,000 investors or more than 500 unaccredited investors, you immediately become a public company or subject to all of those reporting requirements, which is going to cost you a lot of money and be a real pain. So, you know, any company would avoid that at all costs. The SPV vehicle really gives you a great way to not get close to that 2,000 investor limit or the 500 unaccredited limit, because this round, each round that you use an SPV on is only going to count as one towards that limit. I know John's going to plan on talking about that more. Testing the waters is really important. Now, testing the waters has its limitations. So you actually have to keep a record of all of your testing the waters materials that you use, and they need to have a legend on each one of those materials that says no money or consideration may be solicited or accepted. So those 3 bullet points that I have here under testing the waters, those need to be included with any solicitation materials you do during the testing the waters period. But it's really important for you because it gives you the opportunity to line up some important investors early, to kind of get out there and create some awareness without the restrictions of the general solicitation rules. Then those solicitation materials you use during the testing the waters need to be filed with your Form C. So if you keep good records, you're not going to be in trouble there. But it gives you the opportunity to really hit the ground running as soon as your raise goes live. And anyone who's been through a Reg CF raise knows that those first 2 weeks, those are critical. You want to get as much money in quickly as you can, because that's going to attract the attention of the quote unquote crowd. Demo day rules, once again, this is important. Now, it's not any demo day, it's not any conference, but if the conference is by one of the accepted entities, so higher education, accelerators, incubators, angel investor groups, any state or local government agency that sponsors that demo day, if you participate in those, you're exempt from the general solicitation rules under regulation crowdfunding, and it gives you a real opportunity to engage with potential investors at those demo days. And then finally, the COVID-19 special rules being extended. This is important, and the next slide is going to actually deal with these measures in more detail. So what did it do? Essentially, these rules were put in place to allow small businesses that are really hurting from COVID to kind of use regulation crowdfunding as a means to gain access to capital quickly. And so as a result, you're seeing the qualification here is that you must have, your organization must have been organized and operating for at least 6 months. So it can't have been a shell company that you created 6 months ago. It actually has to be an operating company that has an operating history of 6 months. And that's the requirement to file under these measures. But it's really important because you can actually file your initial round and go live and allow investors to peruse your offering before you even have your financial statements ready. They can be omitted originally. You just can't actually transact any business in terms of collecting investments until those financial statements are put in. But for offerings up to $250,000, you can actually certify your own financial statements by your principal executive officer. You don't have to have those reviewed by a third-party accountant. And that can be costly, and it can save you a lot of time. So for companies that are looking to raise up to $250,000 right now that are existing companies, this really represents an opportunity for you. And then it allows you the opportunity also to close quicker. So the SEC considers investments to be binding after 48 hours. And once you have binding investments that are equal to your minimum goal or your target goal, so most Reg CF has a minimum goal and a maximum goal. The maximum goal is an oversubscription goal. So you're allowed to, once you hit your minimum goal, you can start to close on that money and then continue to close until you reach your maximum oversubscription goal. This allows you to do that quicker. Normally it's 21 days that you have to wait. This allows you to do it actually within, conceivably a week or, a few days, as long as you get a whole lot of investments in early and you have say a minimum goal of $25,000 or something. What about the fees and the costs? So it's not free. Just like anything, as you engage third parties, it can get even more costly. But your primary costs are The intermediary, so either the broker-dealer or the funding portal, is going to charge a percentage of your raise. So, you know, these can range to 10% or higher. Ours is right now, I believe, 6%. Additionally, they're going to charge you for certain pass-through fees like bad actor checks, escrow setup, management, and the investment processing fees. So if you choose to accept credit cards, you know, there's a fee there for each one of those. And certainly any portal or broker dealer will go through their list of pass-through fees when you engage with them. Additionally, you're going to have legal fees, because we as a portal and we as a broker dealer and most other portals and broker dealers will recommend that you have your own legal representation. I think this is really important because you're issuing and signing legal documents, including subscription agreements, and you're going to want to have legal representation to kind of go over those. Also to go over your set of risks that you put out there, because risks are very important for an offering, and certainly legal can help you there. Third-party accountants, if you're required to have reviewed financials, so if you're not under the COVID rules and you are raising $107,000 or less, you can self-certify. If you're taking advantage of the COVID rules, you can do it up to $250,000 and self-certify by the principal officer. Beyond that, you need to review your financials, and that's going to cost you some money, and it's going to take time, and it needs to be done by a third-party accountant that's familiar with this process. There are other requirements that could cause you to need to have audited financials as well, and that's going to cost money as well. Marketing. So, you know, marketing really is an open basket here. A lot of portals will recommend that you should spend 10% of your raise in marketing dollars. Now, we don't necessarily believe that. We think that if a company has a great social media following, and they've got great connections to customers and partners, they can actually do some organic marketing and do it for cheaper. But, you know, by and large, what you spend is going to affect how many people you're reaching. So if you want to think about that, especially if you're one of those companies that's looking for those marketing benefits, the more you spend on the marketing for the raise, you're actually getting marketing for your business as well. And then assistance with design, copywriting, et cetera. You know, it's important, it's really important that you take care to make sure that your presentation is professional looking, both from a design perspective and also a copywriting perspective, that your logos look great, that your pictures of your team, the pictures of your business or your product, that the copywriting that's describing all of that is easily read. You want to make sure that that's good. Now, a lot of companies have internal resources that they can rely on for that, but some don't. So you may have to engage third parties that can do that. Additionally, you know, there are companies like John's that are rock stars in the diligence and packaging part, and that can, you know, have an expense associated with it. That, and I know John's going to talk about that later. Now, Reg Cf sounds great. It's got so many benefits, and with these new changes, it's going to be a very exciting vertical within the private markets. Is it for every company? Absolutely not. There are some companies that just are not great fits for regulation crowdfunding. If you're the type of
and Ben, so we have some time for some Q&A and the other panelists. We only have 20 minutes left right now. Okay. Let's like, these are great slides, and I think that everyone can get these from Fundopolis. Okay. Mm-hmm. And also this presentation is going to be recorded. So there's a little, I think you've got a little bit of an overview on the exemptions, which I think is addendum material too. How would you like to leave this message about how to approach this with the audience, so we can talk about the packaging process and the legal implications from Gautam and John?
Yeah, I think that you know, this is something to take a serious look at. If you've been a company that has looked at regulation crowdfunding in the past and had it poo-pooed by people that you've spoken to, that's not your current regulation crowdfunding, and you should take a new look at it, because you know, serious investment companies are doing the same, because the game has really changed. No longer does it represent a really messy cap table. No longer are you limited to $1 million, which really isn't a serious round. It really is something that should create a lot of excitement. And certainly, you know, each one of the people here on the panel, we're separately contactable, and you can run questions by us about any of these things. And there's Reg Cf has a lot of rabbit holes to go down into that have a lot more detail than I've gone into so far.
That's great. This is a fantastic presentation, and we're going to now move over to a conversation driving off of this with John and Gautam. I think there's one thing to note here. So everyone knows here on the call, Vertalo is an SEC registered transfer agent. And one of the most important things about the connection between, say, a Fundopolis and a Vertalo is the role of the transfer agent in that process, and why we work with Ben DiScipio and Fundopolis. Maybe Gautam, you want to talk about a little bit about safe harbor and this related to Reg Cf and transfer agents. And John, a little bit about the packaging, and Jenny some about marketing in the time we have available to us.
Yeah, thank you, Dave. So the SEC, in adopting the Reg Cf rules, made a very good safe harbor for people that use transfer agents in connection with the Reg Cf offering, right? For one, the intermediary benefits because it is deemed to have satisfied the requirements of the Securities Act, Section 4A6 specifically, if the issuer utilizes a transfer agent, right? And then on top of that, they have another safe harbor for transfer agents, which is that the issuer never has to worry about becoming a public company or the 12G issue that Ben hit on earlier, if that issuer, among other things, uses the services of a SEC registered transfer agent. Under Section 17 of the Act. So these two things taken together make the role of a transfer agent very important. And it also helps the company, the issuer, because you don't have to try and manage all of this stuff yourself on a spreadsheet back at the office when your real goal is to be awesome in the business that you're creating. You don't show up to manage your cap table, but that's precisely what we show up for. So so the SEC was quite helpful there. And John, why don't you talk a little bit about some of the other stuff that we haven't hit on yet?
Yeah, my pleasure. And Ben, thank you for such a wonderful presentation. As I'm sitting here listening to Ben, for the audience, I'm sure you guys are feeling the way I am, which is this is a lot of information. There are a lot of moving pieces. This is new, right? These types of things can seem exciting, right? And as an issuer, you're always just concerned about, okay, what's the best way to raise capital for the company so that I can go execute on the objectives, grow the business, right? And what DealBox does is tries to help companies realize that that's not what they should be doing themselves. If you spend 80% of your time as a management team member or a founder or an executive at an early stage company, getting yourself prepared to raise capital or physically raising capital, you're not doing the best that you can be doing to actually grow your business. So here at DealBox, what we like to say is, let us focus on what we do best and you focus on what you do best as the issuer. And what I mean by that is, all of this amazing stuff that Ben just covered, we take care of all of that for our clients. We make sure that all of the regulations, the registrations, the offering memorandums, the data rooms, the connections to transfer agents like Vertalo, I'll disclose publicly if the audience is not aware, Vertalo and DealBox is a licensee of the Vertalo software and system. we manage digital cap tables for our issuer clients via the Vertalo transfer agent capabilities and their digital asset data management systems. So I'm hoping that everybody can gather, and I'll leave the audience with this because I want to make sure that there's time for questions. I want Jenny to talk about marketing and social and things like that. But the bottom line here, folks, is that this is a very complex ecosystem of integrated parts that need to work holistically together. And it's very rare that we come across an issuer or a management team that can do this all themselves. And so the most important thing I like to share with people is we're not really here to go out and sell our services. We're here to help people, but we want to make sure that people are thinking about this, again, holistically. And more importantly, to Ben's point about costs and fees and these things, they need to be budgeted by these businesses. You can't just wake up in the morning, like Dave said, with a pitch deck and a website and go raise capital. So we really encourage people on the note of education to take a hard look at these things. Go ask questions of service providers. Go diligence for yourself, legal firms, accountants, investment packaging consultants like DealBox, funding platforms like Ben's. But what you'll find is that you want to be working with, if you're going to raise capital under these exemptions, you want to be working with an integrated ecosystem of service providers. And that's what we collectively as the panelists on this webinar today do. So if we can be of help or service to you guys, our website is dlbx.io. You can email me directly at john.nance@dlbx.io. I would be happy to speak with you. And with that, I'd like to turn the floor over to Jenny.
Thanks, John. Thanks, Dave and Ben. That was a great presentation. For my part, so that we have enough time for the Q&A, I'll try to close it within the next 5 to 6 minutes in terms of just giving everybody a summary. So while Ben did a great job, here's just a couple of summary points for those who may, because it's a lot of information to absorb, right? So for summary points, let's just say, if you are, a Jill and you are a founder and CEO of a company, you may leave from this webinar and say, okay, that's a lot of information, but it's way too much information. I'm still confused. What the heck do I do? So that's where I come in, and here are the few summary points for you to jot down. And then from there, you can reach out to us and we can help you further, okay? Step one, obviously, it starts with you, Jill, the founder and the CEO. You gotta have a company, you gotta have a product, you got to set up a corporation, if it's Delaware or whatever the case may be. You've heard from Ben that he said Reg Cf is within the United States only. So therefore, make sure you incorporate within the United States, either Wyoming, Austin is growing, Florida, Miami, or Coinlinked is traditional in Delaware, right? That's step number one. Step number two is you need an entity to package your product. That's where John Nance is at. That's DealBox. You reach out to DealBox, say, okay, here's my company. What do I need to do? I need to raise, I want to do Reg Cf. And actually, the reason why I trust DealBox, because guess what? They package Coinlinked, right? So I've worked with them. I know them. I know they're, top of the line. They package my PPM. They did analysis on it. It's great. The great thing for point number two is for those who are questioning, can you do a conjunction of a Reg D plus a Reg S, which is international? Reg D is for accredited with the Reg Cf. The answer is yes. Like, for example, Coinlinked has a Reg D. I also have a Reg S for international investors, and I'm gonna do the Reg Cf at the same time. For, I call it the little investors, because we have a lot of fans. They're not accredited investors, but they want it to have a piece of Coinlinked, okay? That's step number two. And so when you go with step number two, you automatically link with Vertalo, which is the transfer agent, okay? Then once step number two is done, your packaging and it's all legal and they guided you the right way, blah, blah, blah. That's where Ben of Fundopolis comes in, Okay. Now there are a few other platforms you've probably heard, like WeFunder or Republic. They're also one of the top ones. The data was that there were 62 FINRA regulated crowdfunding portals out there, but it kind of, most of them die out. I think there's only 12 right now. Will it come back? Probably. But obviously I am with Ben, with this team here. So I highly recommend Ben's Fundopolis. And the thing that when you go choose a platform for Reg Cf, make sure you check that they are a registered broker dealer, because there may be portals out there that wanted to take your money, listing it for cheap, but at the end of the day, they're not a broker dealer. That is illegal. Okay, so the portal has to be a FINRA regulated SEC broker dealer. Okay, so actually, and that's it.
Jenny, so just to clarify there, they can be a broker dealer, or they can be a FINRA membered funding portal as well.
Gotcha.
So for example, WeFunder is a funding portal, but not a broker dealer.
Gotcha. So the final few points I wanted to share basically is that as of 2020, okay, there were $239 million raised in Reg Cf. Now that will probably double or triple this year because of the new from 1.07 million to the 5 million limitation this year. Okay, so you're gonna see that amount skyrocket drastically. The final few points is, now that you have everything together, you have to, and your company now is live on a Reg Cf portal. Let's just say like Ben, what do? I mean, we've all heard about Kickstarter for years. I mean, even if you launch something on Kickstarter, okay, you're not going to get any money if you don't do marketing. So these are the final few points for how do you market your Reg Cf. Okay, so I just have a 3-pointer. I call it marketing 3 steps, 1, 2, 3. Okay, so the first step basically is, of course, you got to identify your product. Is it a tech sector? Is it a food sector, retail sector, whatever sector that might be? Okay, you have to identify, because you got to identify the problem first in order for you to resolve it, right? The second stage is, I call it the strategy stage. The strategy stage has 3 points. Point number 1 is obviously social media. You got to get on social media. You got to build communities, right? The importance of communities such as Reddit and GameStop is very high these days, okay? So hop on social media. Telegram once may work. I don't know if it works anymore. So don't just stick with just Telegram. Get on Twitter, Reddit, or Coinlink, right? And build a community. The point 2 of the strategy stage is also very important, and many people fail this stage, is public relation, okay? Which is, you call it PR, right? PR firms, yes, you have to spend a little bit more money to pay a PR firm, but it's where they help you as a founder and a CEO to bring your name and bring your presence as a thought leadership, okay? They built your story around you and your company, and they help build the brand awareness for your company. So that's point 2. The final point 3 for the strategy stage is the marketing fundamentals, which is consistency is key. You got to keep on doing it until you complete the race. And obviously, persistent and consistent. The final 3rd point of the marketing stage, I call it, is the communication stage. So think about it, right? You have a great social media presence with thousands and thousands of followers. And when you send out emails, the open rate is extremely high, off the charts. But if you are not getting people to reach out to you, to make appointments, to talk to you as the CEO, then your efforts for all of those things are meaningless, because it is through that final clear communication, the one-on-one, so they can ask questions. Sometimes that's when you get the checks written, or that's when you're going to see money invested into your company. So, once again, the marketing stage, 3 steps, diagnostic stage, that's one. Number 2 is the strategy stage. And then number 3 is the communication stage. So if you do that, then you're fine. The final 60 seconds before we give it back to Dave and get some of your Q&As in, is that, running a company is not easy. It takes time. Through the pandemic, it probably takes double the time. But just keep at it. If you have any question, you see the entire team here. Each of us has a function in this entire thing that you're hearing. So you can catch any of us via email. You can catch me on Twitter. We're here to help you. And I'm willing to bet you the Reg Cf is going to change the way how founders and investors invest in startup companies than it has ever been before, because from 1.07 million to $5 million is huge, and it's going to change the entire landscape. Back to you, Dave.
Wow. Powerful advice and great summary, Jenny. So I hope everyone's enjoyed this session. There's a lot of information here. Of course, this has been recorded, and so we'll be sharing it again. I've got an answer coming to, does the new SPV make Reg Cf a better option for LLCs? What's your one-word answer, Ben? He's on.
One word?
Yes.
So, potentially.
There we go. Potentially, that's a one-word answer. I like that.
The caveat is they still are going to be responsible for K1s to all of the investors.
Right. So that's a little bit of a compliance overhang for folks. So really hope that everyone here came in here curious and left more knowledgeable because of the time that our panelists, Ben DiScipio from Fundopolis, John Nance from Dealbox, Jenny Ta from Coinlinked, and Gautam Gujral from Vertalo have offered for you all. We're available for questions in follow-up, but we'd like to thank you for spending a very valuable hour of your time. We hope that you leave with the same optimism that we have for the coming evolution in capital formation that's enabled by this new update to Reg Cf that goes into effect on March 15th. Again, I'm Dave Hendricks, the CEO of Vertalo, signing off from Vertalo headquarters in Austin, Texas. Thank you all for joining us today, and we look forward to talking with you all again soon. Thanks, everybody.